Morning. Well, amazingly, I shouldn't say amazingly, market rebounded after the continued plunge last night into the void below. And we discussed yesterday the potential for it to hold here. And it did for a little while. And then as the Russell and the NASDAQ kept moving down toward their respective levels, well, they just gave it up and moved into the void. And once it did, it was open to coming all the way down here. And as you can see, it plunged down through the 200 MA, and then it began to stabilize and turn around overnight. And it's moved up now toward this little breakdown area right there. And you see it stalled here after the last few hours. We got a little breakout with the topping tail right over there at 7 o'clock this morning. So we'll see if this hourly rolls back over or whether it can go sideways to push up here a little bit. I see this as just being a technical bounce. We all know that what drove it down yesterday hasn't been resolved and probably won't for a while. So, this type of drop creates a tremendous amount of uncertainty and, of course, fear of a continued move lower and more losses. So as it comes down here, just coming down into this area, where historically markets or stocks, move back up a bit when they reach a certain level, getting pretty far extended. We've got this green bar, which this is 9 o'clock in the morning. This may not look like this at 4 o'clock this afternoon. It may have a big tail on it. It may go up to 28.80. Who knows? I'm just eyeballing this big red bar, and that would be about halfway up the bar. Resistance, more significant resistance, is over here at 28.88-ish. So 28.80 kind of looks like it could be a good number if this continues to go up. So we'll see when and if it gets there, what it does, and any kind of rollover pattern. You can't logically expect this move down to be over in a day, in a moment, whatever. Technical bounces always occur in these kind of plunges like this, and either resolves itself with another plunge lower or some sideways price action. So this is not over at all. Now, we'll take a look at the internals, which are getting close. They move toward levels. So that's encouraging that finally the wrong way option traders that were loading the boat up here on calls, saw the error and beginning flipping to the other side. And it's exactly what we want to see. So when the S&Ps reached that pivot low area that we were looking at yesterday, the NASDAQ futures, if I remember correctly, they were like maybe around here. And I was thinking, can they hold? If the S&Ps start to rally, can this hold there? And things did stabilize for a while, and then they just, next leg down, and then overnight after that day's trading and was over and they opened up again, down they went to the 200 MA. And this is a simple 200 period moving average. And I just show you quickly where the exponential is, because people always ask that. You can see where the exponential is, and just been, my long-term experience with U.S. indices and stocks, simple is the way to go, and the exponentials. They're more accurate as reference points, which just means that's what institutions are using, because the more people that are looking at the same thing with a belief about something will act at that level, and you can see how accurate it is. Well, although the S&Ps plunged down through it, didn't go that much further as it went down under this 2780-ish and then came back up again. So we look at different markets and look for alignment between them. The Dow stopped at its 200 yesterday, just closing slightly below. And then, as you can see, it also plunged lower toward the prior low over here, over to the left. Note all the fib line traders that maybe stepped up to the plate on their imaginary mystery lines got crushed yesterday on the way down because there was just nothing there. And down it went here, close to that. And these are areas, right? We just look at these things as areas. Sometimes they hit the exact points, but it's best not to think that way as a technical trader. You just look at it as an area and then look for your setups that signal a reversal. The Russell was just, again, the void concept is so powerful, is that when they just prices start pushing down and there's nothing there, the institutions just step away, right? They don't care about fibs, lines. They, will respect the 50 MA simple and the 200 and step up there at especially if it's in an uptrend like that. But as this thing starts to plunge, the safe place is down there near the prior low. That's why I always tell everybody, look to the left, look to the left. It's that simple. So a bit of a rebound there, and we'll see. This is kind of drifting lower here, and let's just look at the ETF with more data. You can see, overnight, because that wasn't trading like the futures, a gap up, and we got a little bit of a flag pattern there. And as it came down to that support, bouncing back up. So 149-ish, about and halfway up into the red bar. Nothing that says that this is going to fly higher from here. Moves to the downside like this, as I said, create a tremendous amount of uncertainty. They're powerful. And just looking at, how this started on the way up. Look at the spiders, power, and then consolidation, building, new support, power. And so now at this level where it's just bounced up a bit, we're 285-ish around here, big deal compared to this. Maybe can get higher. There's this gap here. But if we were to get this kind of a pattern, right, flip it upside down where prices chop around and you get a topping tail, which will take a week, whatever it might be, and then the next move lower. So right now, buyers have taken control for the moment. They do have room to push things higher a bit, and we'll see if they can do that. And we'll try and take advantage of it intraday. But now with the break in trend here, the expectation has to be that at some level, sellers are going to step up again, because those that have suffered through this can only be thinking, well, they're thinking two things. God, please let it retrace back up where I can get most of my money back so I can sell. Or maybe it'll come all the way back and, there'll be a miracle here. Or just let me out of this thing. So, those that are trapped. So that's kind of what the beliefs in motion, so to speak, that come into play, where we've all been there, done that, right? Where we just want to get some of our money back, or God, all of my money back. I will never not adhere to my stop again. I'll always do it. All of that stuff that goes on. Crude oil. Come on. I don't know why that's slowing down here for the moment. Maybe my internet is, or e-signal is hiccuping here. Yeah, maybe, I don't know. Anyway, bonds, they were just flying to the upside yesterday. And, the big worries there is the fact that interest rates were plunging, and this yield curve, the most extreme 3-month versus the 30-year, is headed down toward inversion. We'll see what happens here. All the others have already inverted, meaning the shorter terms against each other. So this is the last holdout. We'll see if it's, can hold up. We continue to monitor this. It doesn't move that fast, even though you can see how fast those yields move to the downside. And gold moving up nicely, markets historically move down like this one did yesterday, gold tends to do well, and this has been consolidating for a while. We've gone over how bullish the longer term charts are on this, suggesting it's going to go higher. Silver kind of lagging, but it brought up the rear where gold moved up really nicely early on, like back here, and then this followed, and so this is just consolidating, and it should follow gold once this consolidation is over. It looks great. It's just consolidating up here after this move up. Transports, got killed yesterday with everything else. Everything was down yesterday. We looked through more than 100 different sectors, I guess, in the afternoon, and everything was down except for gold. And so it was an across the board drubbing. Nothing survived yesterday. And what else? Let's just take a look at a couple of ETFs here. What time is it? Yeah, we've got time. We're kind of going through this kind of fast. One of the leaders, aerospace and defense, which has been just a grinder to the upside, collapsed. Biotech had been lagging, down. Home builders, down. Everything went down. Retailing, which has just been the biggest dog, as you can see, last year and this year. Maybe 2020 is the year for retailers. A lot of times things that just lag for so long, money, rotates into that sector, just because it's, let's say, undervalued, been such an underperformer. It's hard to imagine that any of these stores that Amazon has just decimated are going to come back, because I know I'm not leaving the ease of use to press a couple of buttons and have delivered to my home within 1 or 2 days anything that I want practically on Amazon. I'm not getting in my car to drive even 10 minutes. Kind of what an amazing story. Software, down, everything going down. Consumer staples. And so you can just see that nothing survived yesterday. Internet, plunged down to the 200 MA, and Amazon here is taking a look right there down on its 200 MA. So it didn't. I spoke in the dream yesterday about the CNBC fellow drawing the trend line, suggesting that Amazon would hold, and I said that was ridiculous because there was nothing in alignment with that uptrend line. We don't use them here. But here at the 200, some price support, an unfilled gap down there. And what we'll do today, in part, besides looking for opportunities, is to see what actually can hold, meaning what's gapping up here this morning, what actually can hold those gaps and hang up there. And at some point, the markets will see some selling. Whether it's here or whether it's up here, sellers will reemerge today and test to see how far this can go down, and that'll give us some good information. And during that selling period, all of these stocks that are up here pre-market gapping up, we'll see which ones are still above their opening price. So one of the things to do with your minder is you can, change from yesterday. That's not what this says. This is just looking what's pre-market, but change from yesterday and then change from open. And the, things that are the most bullish will have 2 green columns, right? So some will be green, meaning they gapped up, and then some, and another column change from open will be red, which means they've declined from their opening price. So in a bullish market, it's just an easy way to see what's showing relative strength versus relative weakness. Whereas, green versus green red versus red red. It's just an easy way. Markets are going up or they've pulled back the support, and you look, green, that's showing relative strength. Click it, go see what the chart looks like. So we use scans during the day to look for specific patterns, but everybody has a minder, or you should, with any platform you use, that has the ability to put change from yesterday's close and change from the open And like you can see this, well, if, for example, this is just percentage change and dollar change from yesterday. But if this was open and looking at this, I would look at that and say, well, that's weak. It should go lower. Pretty simple, common sense stuff, looking at the minders that way. So that's how I've done it for years and showed a lot of others to do it. Really simple, easy way of determining what has money not only flowing into it, it's above yesterday's close, but continues to have demand or money flowing into it because it stayed above the opening price when it gapped. Or if it's a down day, go look for red. So that's it from me. All yours, Dan.
All right, good morning. Yep, I had Dean Foods in my gap list, of course. And pre-market here on the 15-minute charts, the futures are acting very well. I mentioned to Craig, it'll be interesting to see how far they can push up here in the first hour. But this little bull flag, was teetering for the last 20 minutes or so, but they finally broke to the upside, so that at least gives me a more bullish bias for the morning. We are actually flat in the weekly options trader. In the swing, INOV, long stock, WEC, a little earnings utility stock we got into yesterday, and we were up 75 cents plus, and then look at that crazy action. Look at that big topping tail. It held the stop, but still, that's crazy action. AEO, we're short along with Urban, and those were in the retail bearish 1, 2, 3s. Postage, we're short just a third lot left. SIBO, longs, we actually legged into a covered call. No, that's not true. We started off with a covered call, and I specifically mentioned because it was extended, and that worked out well. Finally, coup, we have a call spread, and I've tightened the stop up to yesterday's high, and that would should guarantee a profit if that's stopped out. DFS had a nice 1, 2, 3 move. Wow. Now it looks like it's gapping down a little bit on earnings, but no setup. Apron, this junk stock. Wow, I didn't know this thing was 160 bucks. Did they do a reverse split? I always thought it was under 10. Yeah, I think they must have. But that's a dog stock. DF, that's what Greg showed you, gapping down here to 117. Yeah, thanks, trader. Because yeah, I thought their IPO was like $8 and it never got over 10. This is garbage. ZTS, a bullish gap here, very bullish. So I put that in this middle window right here. It doesn't have sufficient, the volume is light, but that's a beautiful bullish gap. 30-minute high candidate. C's 31.75, so it's gapping over this consolidation with a price void. Target 33. I got that in this bottom right window. And these are all the earnings that I'm looking at now. Sage had a breakdown yesterday. There's no volume. I can't tell what it's doing. Region up a little bit, but total trading range mess. Moss 2290 gapping down here. No pattern. EMR, it got shellacked, but far from the 20. And it's a shock pattern. It's actually a bull island reversal. If it's opening here at 61, Bull Island reversal with a price void. So that's on my list. BDX 180 reversal here at the highs. 230, so gapping down 6, but no pattern. HEN shows it up $1.70, but okay, there you go. This is trading weird. Is this a McGraw? Is this the buyout one tied to something else? It sure looks like it. Yeah, okay, I'm not going to mess with that. T2 124, so gapping to resistance, but that would be a buy on a pullback. That's also a Bull Island reversal. THC says it's gapping up 30 cents, but I don't see any prints. And this is actually a buy setup after a big, beautiful run. So that's going on my list. Let's watch that 30-minute high. Shack, 75 bucks. And yeah, see, it was 76 when I mentioned it earlier. Now it's messy. Marriott, I don't know if this is why it's gapping down, but well, earnings also. But there was an article in the paper that they had to take a $125 million hit for breach of their security stuff. Yes, I'm looking to short VXX also, maybe short the Friday expiration, because as Greg clearly mentioned, I don't know when selling's going to kick back in. That was you know, does anybody know why the market's reversed? I was up early today, 5 o'clock. And the entire time, I didn't. They just said, "Oh yeah, they erased the gains," but I didn't hear one single reason.
Price support, man.
No, right. That's what I was going to say. Oh no, see, I think Howard has it. Yeah, I think Howard nailed. Well, you both did. Yeah, price support, but for there to be such a reversal. See, I don't even need to I don't even need to look at the chart. I just read the headlines. They were down 600 points last night, and then I wake up and they're up 200. That's more than price support. That's something created an incredible reversal. Yeah, I think that's it. Yeah, I did hear talk about that. That's not a reversal, down 600 and up 200. We will have to respectfully disagree on that. But anyway, back to my point here. Yeah, so my bullish, oh, you're talking about the yuan. Got it. Okay. Talking about our strategy here. Day trade long, as long as we get the patterns, maybe some put spreads for Friday. This is still Tuesday, so 4 days is still a long way away. But that doesn't mean we have to be in them. Yeah, I'm looking at Alex's yuan. Yeah. So in terms of the call spread again on the VXX, I'm open to that, but more short term. I know we were talking to Greg and Trader about trying to get into a call spread on the VXX for 30 days out. And I'm not confident myself to do that yet because I don't have what we refer to as a potent reversal. CAR, that's total garbage. It's deleting you. CLR, it's bearish. I can't tell where it's gapping. ARNA, it's garbage. Zebra, I want to keep an eye on as a put spread. You know, pro gap up here. Nice. So this is a potent reversal. Gap reversal, 50% into that, right on the gap support. The Zebra is a put spread candidate. Tilray, we still are keeping an eye on. PPC, I had as a long over Friday's high. I had Ruby on my long list, MTZ on my long list, MLM on my long list. These are all holding very well. Ballard on my long list. And finally, QSR. Look at that beautiful 1, 2, 3 right there. That is beauty. I mean, that's good to go over Friday's high. Yeah, trader mentioned. Yep, I think that's the strikes he was looking at. But we had a long discussion about the timing of when to do it and what, you know, if you were going to do a partial lot and leg into it if it went higher. And but I do like the pre-market. We're getting a nice gap. So 285.85, you mark it up here, 285. Look, that's a nice bullish gap, over 50% into yesterday's range with a bullish 15-minute. So as long as we hold this pre-market pattern, look, as long as this holds, then I'm bullish for the day. And maybe even for a couple days. And 929, and we're done. Off to the races. Oh, Tesla, we have as a possible put spread.